Hyperinflation, inflation, stagflation, deflation, what's it going to be? That's what we'll talk about today. The first thing I want to look at is the stagflation nation. This is being discussed by every major bank and investment company today. The second thing I want to talk about is the European winter, how high gas prices have been, energy prices, food prices, and so on, and how that affects you, as well as some information related to Russia. The third thing I need to discuss is the broken chain, and that is the supply chain. You have seen how this is broken down, how this relates to Halloween specifically. Yes, that's right. All of that and more. Let's go. Like I said, you can see all of the big banks talking about what's happening with stagflation. It's the talk of the town. This is from Deutsche Bank. There's a lot going on the chart over here, essentially asking the question, what are the risks of stagflation over the next 12 months according to your definition? The percentage that defines stagflation as one of those scenarios is highlighted in bold along the top. So we've got this breakdown. I'll pull out the highlighter and you could see in this case here, the majority, 43%, growth around zero or negative, and inflation well above target. Or you can look at it like this, a strong slowdown in growth and strong pickup in inflation, or this 30% growth below trend and inflation comfortably above target. Regardless how you look at it here, it just shows you, okay, very high being the dark green. Looking at this, the UK in all scenarios here. UK, my friends in the UK, stagflation has certainly been in focus. There is no doubt about it. All right, now you can see the different areas. I believe personally what we're seeing right now has many elements of stagflation because the growth has been pulled from the future into the present, and at the same time we have this inflation that will not quit. Who knows what's going to happen in the future, but right now, this is certainly the case. Many indicators pointing in this direction. So look at this. Environments in the US of high inflation and slow GDP growth. Going back from 1960 up until the present, over the last while, many years here, we haven't really seen stagflation, and they're just showing you the number of quarters each year with real GDP growth 50 plus basis points below the trend and inflation 50 plus basis points above the consensus long-term estimate. So you had that period between the 60s into the early 80s where stagflation was much more common. Today we haven't seen that. So when we're encountering that today, it's going to be a huge detriment to all things, and we'll get into that more in a moment here. Like this, equities. Your stocks could be affected by it. Check this out. Equities have typically struggled in stagflationary periods. This comes from Goldman Sachs. They measured this out and hasn't done well. 1960 to 2020 returns measured with 1 quarter lead relative to economic data. On the left-hand side, we're just seeing those percentages there, and it looks rather weak. So you can look at the all quarters, 2.5%. All right, median quarterly S&P 500 performance since 1960. And then you can see the slow growth and high inflation looks like it is in the negative 2.1%. And this lighter blue dot is just saying realized volatility. And that certainly, when you have higher inflation, you've got slower growth, you're going to have some serious problems, no doubt about it. Now, this is the Citi Global Inflation Surprise Index. So month after month after month, they are being wowed by the amount of inflation. We didn't think it was going to be this bad. Next month, we didn't think it was going to be this bad. We were told, if you remember, if you were on this channel before the summertime, let's say springtime of 2021, they were saying by the time we move through into the summer, we are going to see inflation levels come down and, things will kind of get back to normal. We made it right through the summer into September, and the numbers kept elevated or even higher depending on which we were looking at. Look at commodities, look at so many different things. That's obvious. But we can go back here and compare this to the drawdowns and actual outright recessions. And when this tends to get hot and heavy, it precedes an event, whether that is like 2008, as you see here with a big spike up, or one of those more minor drawdowns, slower periods of growth. So we got 2000 on here, 2008, certainly. 2011, we have big problems. 2011, they showed up more in Europe than they did in the United States, but still issues. 2017 had some as well. Doesn't necessarily 100% correlate, right? But it tells you what's been happening. What about this? Goldman Sachs, and just like all these other banks, are always off on their forecasts. Okay, I'm showing you April, May, June, all the way down. Okay, look at this. It's the GS inflation forecast. Just look. December 2021. Okay, it's 2.05. Move in a month later, they're saying it's going to be 2.5. A month later, they're saying it's 3. Then it's 3.4. Then it's 3.8. Then it's 4.25. By the time we get to the end of this thing, it's going to be 20%, and they're still not going to admit the truth. All right. Now, listen, we need to break this down in the Money GPS Insights. Let's get into it right away. Historically, energy tends to fare very well during a stagflationary period. PE ratios tend to decline during these periods of stagflation. Always remember that central banks hold the key to what happens in the markets and the economy. So let's get into Europe. Let's talk about Russia as well. And before we do, make sure to hit that thumbs up button to support the channel. It's right down there. One click really does help me out. So if you're in Europe, or if you're just interested, this is so key to pay attention to. There is also little sign that Gazprom, the Russian gas export pipeline monopoly, which supplies 35% of European gas needs, is attempting to pump more gas to Europe's spot buyers via existing routes. And overall, given its small room for maneuver, it is unlikely that Gazprom would deliver more than around 190 BCM to Europe this year. Stay with me. European prices are unlikely to cool substantially in 2021. There it is. Now, many have pointed to the gas pipeline. Hey, let's open this up. Let's make this happen. Let's do this and let's get the prices down. Well, we'll see. This particular individual expressed doubts that Russia is able to supply more gas to Europe too, noting that the production is already at record levels. Remember that. Remember, there's always more than one side to the story, right? Russia has been faced with the same demand pressures. It was a very cold winter in Russia last winter, yes. And Russian production is up actually at record levels. It's well up on last year, of course, when demand was down, but it's also up on 2019 levels, and they've been having to refill their own storage as well, which was depleted badly because of the cold weather. So they have their own issues going on, so they have to have their own stockpile for national interests. You see this all the time with oil or any other type of commodity as well. You would hope that you would have your own country's interests kept first, but that's a whole different story. You could see right now, this goes back from 2020 up until the present, Russian natural gas supplies to Europe, fluctuating all the time, but right now this is down heavily, where it might be sitting around, let's say 800. Typically right now we are at 245. So we don't know what it's going to be in the coming weeks, but certainly this is becoming a very big issue. They got the pipeline coming through into Germany, flip the switch, and perhaps this can come online and actually reverse some of the conditions. But at this time, that isn't the case. Blackout warning for Delhi if coal supply not restored in 2 days. This article was updated as of the 9th. So by now, we'll see what happens. If you know what's going on, put it in the comment section below. Let's discuss this. In fact, not even just with India, but anywhere else. If you have new developments of what's happening in your area, put them in the comments. Let's discuss. I want to know from you, the grassroots. over half of India's 135 coal-fired power plants, which in total supply around 70% of the country's electricity, have fuel stocks of less than 3 days. This is a crisis. This is massive. We're talking, 1.4 billion people? I mean, this is going to be an issue, no doubt. If they manage to get through this little blip, this little bump, what happens next week? What happens the week after? Okay, this is a big problem for every country, it seems. India has enough coal to meet the power plant demand, according to the ministry. Well, like I said, it's fine for now. What happens when we move into, colder weather? What happens when we move into further disruptions? Not just with India, with all these other countries. We are not in the depths of this yet, and we have so many problems. Speaking of problems, look at what's happening with the supply chain. The supply chain is something that, you didn't really think it would be this fragile, and yet here it is, over a year and a half into this thing. The scariest part of Halloween this year is the supply chain. Shoppers searching for costumes and decorations for the holiday are finding empty store shelves. If you are interested, you could read through this. They name specific big box stores that they're going through, store shelves are empty. Okay? You just got to go through. I mean, Lowe's, Home Depot, TJ Maxx, Home Goods. I'm already seeing Christmas stuff replacing Halloween stuff, which is ridiculous. I'm like, hello, are we just skipping Halloween this year? And apparently they just don't have enough stuff to put on the shelves. So they're bringing the Christmas stuff out. At the same time, a lot of these stores are actually ordering well in advance. They were ordering this stuff in the summer, wanting that stuff to make sure that they can get those sales for Christmas. They do discuss more about it if you're interested. Essentially, store shelves empty of Halloween stuff specifically, and they're just highlighting that, even though they say people will be spending more than ever before. It will be a record high in the United States for Halloween decorations. So they've got money, they got disposable income, if that's the case. Manhattan's empty storefronts multiply with workers staying home. Nearly 30% of 311 storefronts were vacant in the retail corridors near Grand Central and Midtown East as the end of September, roughly double the historical rate. This is a problem. Imagine how many businesses, not the ones that are just going out of business or what have you, but in the periphery, in those, maybe there were a little sandwich shop on the corner that was, they were every break time and lunchtime and breakfast time from the people in the financial towers and businesses and the auditors and the insurance companies and so on. They would go to these little places that are around. Now those places are struggling. It's all over the place. This is going on. What does your downtown core look like? Is it empty? Is it a ghost town? Let me know. Put that in the comment section. If you don't want to give too many details, just give something. Give something that you can and you feel comfortable for, whatever you feel comfortable with, okay? And I'm going to end it there. I've been going on way too long. I hope you found this informative. Look, if you're not already an insider, you got to be, because that's the way that 5 days a week I can get to you. I email you the video of the day. It is available to you right here for free, themoneygps.com or at this card. And of course, as always, support the channel simply by clicking that like button. It's right down there. Hit it, and I'll see you on the next one. If you haven't seen this video yet, then you've got to check it out, all right? Just click it, and I'll see you over there.